Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon. He's the CEO of Inc. Research. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Thanks for having me back, Jim.
Ted, is inflation part of the play for insiders right now?
Well, since we've entered into this crazy COVID-19 world, we've put to work our framework, which we actually had been working on at the beginning of the year before the pandemic hit. As we entered 2020, we were wondering if the Fed was ever going to meet its inflation target. Do you remember those days when the Fed used to have a meeting, and once in a while someone in the press corps would say, Mr. Powell, what about that 2% inflation target you have? Are you ever going to meet it? And of course there would be some kind of wheel spinning about, we're having a meeting and we're looking into it and la-di-da. Then the pandemic hit, and all of a sudden, the question became, are we in a depression? Are we in a recession? Or, what's going on? And the whole inflation question kind of got put to the back burner. The deflation bears, of course, came roaring out of hibernation saying, okay, this is a disaster. We're heading for a Great Depression type deflation. We weren't so quick to buy into that, and we've put to work our D economy versus G economy framework. So what is that? We were looking for either a deflationary type economy where the debt bears and the deflation bears would be proven right. That because of all the debt that's hanging out in the world, that it crushes the global economy, and we have spiraling downward prices because nobody can afford to buy anything, and companies go bust, and so it's really kind of a dust bowl economy. I mean, that's really what they're, and I'm not going to name any names, but they're the usual suspects out there that have been emboldened by the bond market, even though it's being manipulated by the Fed. They still look at that as an undeniable signal that we're heading for deflation. Well, they may be proven right. Yet there is another alternative, and that's the G economy. And that is where the government interferes so much with the economy, or intervenes, I guess, it would be a more polite way of describing it for all the Keynesians listening to the broadcast, Jim. But they intervene so much and they spend so much money that it actually overwhelms the deflationary case, and you have a government-led inflation. So we're looking for either a D economy or a G economy, and we're approaching this with our eyes wide open, and that we're not looking for a bias. We're not being biased one way or the other, because there are compelling arguments on both sides. The deflation bears have ridden the bond bull market to riches. You've got a lot of money's been made by just riding the bond market. At some point, that will come to an end, because all good rallies come to an end. Maybe this one will last for 100 years, but maybe it will only last a few more weeks. So we just don't know, but we're looking for signs, whether it's going to be a D economy or a G economy. Under a G economy, we would expect bonds not to do well, but you would have gold, silver, and stocks doing well, because you would have some stocks, not all stocks. You would have inflation, so you would be looking for financial assets that can at least return good nominal returns by being able to take advantage of rising price levels. Okay. In that environment, bonds don't traditionally do very well, and in that case, the bond bears better hope that the Fed is really good at keeping bond prices elevated and yields low. because they will be the only game in town if you do have a major inflation. Okay, so that's been a bit of a, I'm just trying to set the scene here for what we're trying to do. We're trying to put a G versus a D framework together. And what signs have we been seeing? Well, we've been seeing a little bit of both since the pandemic hit. But over the last week, we've finally seen some signs tilting to the G economy. Now, it could be premature. We don't want to get too excited. This isn't a slam dunk. There's still a lot of ground we have to cover between now and, let's say, the fall, when people are going to be worried about a second potential wave of the coronavirus hitting our shores again. Well, it's still on our shores, but kind of a re-emergence of the virus. We're starting to see some signs that inflation may be happening. And what have we seen? Well, for example, we've seen insider behavior in Canada turn relatively bullish. So that's important because Canada is sort of a pro-inflationary market. We're more geared towards inflation, particularly amongst insider stocks. The Canadian Insider Index is a mid-cap oriented index. Focuses on stocks that insiders like. Insiders, more or less, are going to be looking for stocks that have good pricing power, good revenue power, and also they're going to be looking for situations, Jim, where investors underestimate the ability of companies to maintain their profit margins, okay? So in Canada, we have a lot of big, powerful market companies, in certain industries that carry a lot of weight. You just look at telecom. There's only a few big players, the banks, a few big players. They've been pretty successful at maintaining their margins over time, okay? And investors sometimes get too gloomy on that. So if we are entering into an inflationary period where insiders see they can maintain their margins in rising prices, if they believe that investors become too pessimistic on commodities, insiders are going to buy up their shares. And that's what we're seeing. That's what we've seen in the past few months in Canada. And we've got a nice bullish signal here, which gives us some confidence, not a lot of confidence, that there is an inflationary impulse in the market, okay? And when we look at what our spring rebalancing showed in the Canadian Insider Index, and we announced it 2 weeks ago, and we implemented it last week, we have got 78% of the names in the 50 stock index that are geared towards, the G economy or both G and D. Gold miners, a number of gold miners went into the index, and most of them can do well under both a G or a D economy. Some would do better under a G, some would do better under a D. But in general, the gold's looking pretty good here. Gold miners, pretty good depending, on how efficient they are. Could do quite well under both a D or a G economy. Where the gold miners have trouble is, in that Goldilocks economy where everyone thinks everything's great, and why do you don't need gold because everything's fantastic. So that scenario I don't think is going to be the base case for the foreseeable future. So the gold miners are looking pretty good here, and at the bottom line right now is we're seeing on balance a tilt towards an inflationary outcome, not a deflationary outcome. And there are some I want to say fundamental factors that explain why that could be happening beyond just what our signals are picking up. And I can get into that if you like as well.
We'll have more with Ted Dixon right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're chatting with Ted Dixon. So, Ted, you said you were looking for inflationary, deflationary signs. What are those signs, and what are you seeing?
Well, we talked about some of the indications we've seen from our indicators, basically that in the Canadian Insider Index rebalancing, we've tilted towards those G-economy, government-led inflation stocks. One of the reasons why insiders may be anticipating that inflation is the tremendous amount of fiscal response, government support we've seen in the pandemic here. Now, let's just take a look at the United States, because to be honest with you, I can't keep track of how much money Justin Trudeau is throwing at this. I don't know, but it's a lot, okay? The U.S., I've been able to sort of get my head around it a little quicker. I just, their process is a little slower in the sense that they actually have to go to Congress and pass appropriations here. In Canada, it just seems Mr. Trudeau is able to step out on his porch and announce another program. But in the U.S., it looks like the Treasury is going to be borrowing basically $2.6 trillion in Q2 alone. Okay? So that's net of a little cash build they're going to build. They're going to build. Now, that represents almost half of what the gross domestic income was a year ago in the same quarter. Okay? So you've got the U.S. government basically pumping in 50% of what people earned last year at the same time. That's a lot. Now, to be a deflationist under those situations, you have to believe that basically the U.S. economy in this quarter is not, is basically falling more than 50%. But we know that's not the case because they're actually trying to get back to open up the economy. Now, whether that's a good or a bad strategy, that's a different question. The fact of the matter is, the U.S. economy has not ground to a complete halt, and you've got the government pumping trillions of dollars into it in a flat sort of this. You've heard of flash crashes in the market where the market crashes overnight. Well, this is like a flash stimulus of trillions of dollars. When the economy is sort of, doing, this sort of sluggish rebound. And what does that mean? Well, it means the supply chains won't be able necessarily to keep up with the demand with all this money coming in. In fact, I've heard stories that I think are, been well documented that you've got a number of people in the U.S. who are actually making more money here on government stimulus than they were in their job. So you've got this very odd situation of massive amounts of stimulus, checks going to people who aren't working, but then who can go and spend it. Now, you think about that for a moment. People aren't working. So, Jim, like, if I said to you, hey, why don't you just stop doing these broadcasts for, a month or two, but, I'll actually pay you more to actually not work. Wouldn't you think, hey, I have a few extra dollars in my pocket, maybe I'll, enjoy this while it lasts? And, that's kind of what's happening here. So it's hard to sort of get your head around, at least in the short term now, I think going forward, the deflationary case. And we did obviously have a collapse in the oil market a few weeks ago. The big question now is, Jim, was that it? Was that the deflationary collapse that we had in March and early April? And now has this government largesse ignited something different? And we don't know the answer to that yet. It's still early. I don't want to, leave the impression that, this is a slam dunk that we're going to be heading towards inflationary times. Just that I think in the short term, the inflation bulls, have the wind at their back. The question is, how long will that wind prevail? What happens when we get into the fall? My sense is no politician in Washington is going to want to let the economy run at a fuel between now and November. If anything, I think the bigger risk to the U.S. economy is going to be after November where maybe they start worrying about the bills. But leading up to that, I think you're going to have a pretty much a bipartisan effort to keep the U.S. economy going. And does that lead to inflation or deflation? At the end of the day, I think you got to put some common sense to work, and you think, well, all this government money flowing around, the G economy case, does have a bit of an advantage here, at least for the next few months. That's positive for inflation-oriented stocks, and we're starting to see some evidence of that in the market. With the S&P 500 trying to make new highs, but also, we're seeing the Canadian Insider Index really come to life here in the last week or two. So, but we do have a bit of an inflationary impulse, and the key will be how much momentum and how long can it last. And, we're still in these tricky times, so, that hasn't changed. But, I think for the time being anyways, the momentum has kind of shifted a little bit in favor of the inflationary case.
We'll have more with Ted Dixon right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, interesting little argument here. Gold versus Bitcoin as a store of value. What's the better deal?
Well, if we are heading towards an inflationary case, you want to look for assets that are going to protect your value, with rising prices. Historically, gold has been the place to go. It has been the consensus store of value. And aside from a few people you hear on CNBC all the time, who the predictable suspects who scoff at gold because it doesn't pay a dividend, you've got history on your side that gold is a store of value. But Bitcoin now is emerging as an alternative, and there are a lot of skeptics out there, in the gold community when it comes to Bitcoin. But there was a very interesting discussion that we heard on Canadian Insider and Inc. Research this week with the CEO of Galaxy Digital, which is a stock that trades on the TSX Venture Exchange. They focus on cryptocurrency and Bitcoin, and they basically try and provide that service to institutional investors, and the stock is actually applied to go to the TSX. But we heard from Michael Novogratz, who's the CEO of that company. Now, obviously, he has a bias towards digital currency, but his point of view was basically boiled down to, look, gold is a store of value. It's the historical store of value. But why consider Bitcoin at this point? Well, because it too is a store of value in that, it's limited in its supply. There is a built-in algorithm that basically limits the amount of Bitcoin that can be created over the entire life of Bitcoin, and the inflation rate has just dropped by that algorithm. And the Novogratz argument is that the reason why investors want to consider Bitcoin now is because the adoption rate is so low. So there's more upside, okay? That as more and more millennials and younger investors who are more tech savvy, I guess, or oriented, they will eventually start to accumulate more of this. But a bigger opportunity for Bitcoin is when institutional players and institutional money decides to move into this space. And given what we've seen with some major institutional players over the last few months, Mr. Novogratz feels that that time is coming very soon. And, we saw a major hedge fund player, Paul Tudor Jones, make the case for Bitcoin along with gold and some other assets as a store of value in an inflationary period. As these types of investors start to warm up to Bitcoin, there will be a greater demand for Bitcoin, but the supply remains constrained. So the Novogratz argument is, look, it's just the opportunity right now is that Bitcoin is likely going to get, I mean, this is his view, more demand. Supply is going to remain constrained, and that is going to, provide it some torque here, and probably more torque than gold in his view. Now, that remains to be seen. I think you can't go wrong with both, right, or either. Just that, the Bitcoin case is, I think the strongest element for the Bitcoin case is that the adoption level is set to likely increase. And I think you'll also see the adoption level of gold increase as well, because there's so few institutional investors with that kind of a exposure. But Bitcoin is even smaller. So you probably have a little bit more runway, at least, the Novogratz argument would be you have more runway with Bitcoin initially, and that, but he thinks it's a small window because he thinks very soon, like in the next year or so, you're going to have some major institutional, brokers and financial houses providing more access to Bitcoin. So that will make it, more available. And, at that point, the price could go up quite a bit, at which point it's no longer a value. The opportunity is no longer there. So, his point is, the next year is probably, if you're looking to get into crypto and digital currencies, the next year or so is the time to do it before all these new avenues and new ways for institutional investors to get their hands on it are available. He mentioned that his company, for example, is working on providing ways for institutions to get exposure to digital currency. So, as these avenues open up, then the adoption rate could rise, and at that point, sort of the opportunity is gone. So that's kind of the argument in favor of Bitcoin that we've had here. So it's not an anti-gold argument at all. It's not saying one is better than the other. It's just that in the life cycle of the two, gold's been around for as long as the planet, has been here, and Bitcoin is not. Bitcoin's, a decade old or so. So it's it's a much newer beast, and its adoption rate is much lower. So the theory is that it's got more upside just because it's got it's a smaller base that it's starting from in terms of the adoption level. So we will see. I think everyone has to make their own mind up, and Bitcoin is by the way, very risky to own. At this point, it's riskier than gold in my view, in my personal view. So, one has to take that into consideration. I mean, gold, as long as you don't buy some fake gold off of somebody, you can store it, and, it's pretty easy to kind of store. But, Bitcoin, it's a lot harder to buy, and it's a lot harder to store safely. So, it is a lot riskier. But, the properties in terms of its scarcity are quite compelling. So you've got the opportunity on the one hand, but you do also have some higher risks, higher risks than with gold on the other. So there's that trade-off as well. And, we will see how this plays out over the next year. We will see if you get that kind of institutional move into cryptocurrencies that Michael Novogratz is expecting.
Sure. I mean, your Bitcoin could disappear with a power failure or the loss of a password. At least you can still crack a safe to get at your gold.
Well, that's right. But what's interesting though is that, this pandemic has kind of provided people with the opportunity to look at the case for both, right? Because, when it comes to a pandemic, you may not be able to get to your gold if it's located somewhere else in the world, or even somewhere else in the country. If it's physically located and you can't travel, then you've got a problem, whereas, Bitcoin, you can keep it on your phone. However, you think of a natural disaster, where your electricity is cut, well, then you got a problem with your Bitcoin. So, there's arguments for both, and it probably strengthens the case for having, a bit of both depending on your risk tolerance and, what your allocation is. Everyone has to make their own decision. And one can only hope that as Bitcoin becomes older, that there will be more sophisticated and more trustworthy solutions to hold it, and that people will start to feel more comfortable with it because the solutions will be stronger. We're still in the early days, of course. So, but there are arguments, and there's, cases, for both, and both have their advantages, and, but the adoption case, for Bitcoin is an interesting one, and I think it's a compelling one, for those who do have the risk tolerances to look at crypto, currencies, and, it is something to consider over the next year, because by the time everybody's getting into it, then then it's too late. You don't want to be buying when everyone's buying. You want to buy when people are still skeptical, and it's still kind of hard to buy, and it's still, it's like gold, right? I mean, the best time to buy gold was in the internet boom, right, Jim? In 1999 and 2000, when no one wanted gold. Well, who cares about gold? When we can buy pets.com, right? That was, if you loaded up on gold back then and you held it for 10 years, then, you'd be looking pretty good.
Yes, I remember when gold was being described as just a bunch of pretty rocks.
That's right. Let's try and dust off some of those Bloomberg articles. I remember them well, and I remember who wrote them too.
Ted, thank you so much for being on the show.
Thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of inkresearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HoweStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.